Hi everyone, welcome back to Saheb Academy. Today in this video we are going to understand one of the most important and basic concept of accounting, which is very essential for you to understand and for each and every accounting student, and that is the dual aspect concept, which is also known as the duality concept or double entry concept. It's really simple and straightforward. Let's start the video and let's understand what this concept says. Now see here, the basic idea behind this concept is that whatever transaction or events that happen in your business, it will impact the business in two ways, and the impact will always be equal and opposite. Okay, that's what always will happen. Always there will be dual impacts, and as an accountant you have to record both the impacts properly in the accounting books. Fine, that's what the dual aspect concept says. Now how do we see these two impacts from the accounting perspective? We see these as, debit aspect and credit aspect. Yeah, as I said, there will be dual aspect. So one would be the debit aspect and another would be the credit aspect. Now what does that mean? We'll understand with the help of an example. Let's just say, your dad gave you $5,000 to do some business. So what you did was you took that $5,000 and you started your own small furniture shop. Okay, so now tell me what has happened from the point of view of the business. From the point of view of the business, as an accountant, you will say, see, business has received $5,000 from me, so that's business asset, 5,000 cash, and at the same time that money has been received from the owner, so it's capital, or you can say it's owner's equity, right? So on the other side of the accounting equation there will be what? Capital of 5,000, right? Isn't it? Yes. So you see, the same transaction has dual impact, one cash, one capital, right? Let's just say now you purchase $2,000 worth of inventory. Okay, you purchase furniture with cash. All right, $2,000. So what has happened now? You had $5,000 cash. So now from 5,000 it will be decreased to 3,000. 2,000 decrease will happen, and then furniture will come, the inventory of $2,000. So furniture will increase. Both are asset. Okay, so this is the thing. Now how do we record these transactions in the accounting books? You saw now how there are dual impacts. Yeah, cash increased, capital increased, and then we purchase furniture, so cash decreased, furniture increased, right? So how do we record this in the accounting books? It's really simple. See here, both the aspects must be recorded according to the rules of debit and credit. Let me tell you, there are two different types of rules of debit and credit. One is the modern approach that we follow mostly in all of our videos, right? Modern approach, which is based on the accounting equation, a dealer technique we have, right? See, this is how the modern rules of debit and credit. Yeah, we say that there are only 6 items in accounting, only 6 category of items, right? Drawings, expense, asset, and then liability, equity, revenue. We say first 3 are the debit balance group and the last 3 are credit balance group. What does that mean? That means drawings, expense, and asset, they have debit balance, they're of debit nature, and liability, equity, revenue, they're of credit nature. Fine. So to record the first 3 items we debit, and to cancel or decrease them we credit them. On the other hand, to record the last 3 items, liability, equity, revenue, we credit them. Whenever they increase, whenever we have to record the value, okay, and then whenever we want to cancel or decrease, we debit them. Is that clear? Okay, this is the modern approach of rules of debit and credit. Fine. Okay, and then we have golden rules of accounting, which I don't usually use. I will make a separate video on that. Here we have 3 different types of accounts, such as real account, personal account, and then nominal account. Okay, and then based on that we have the rules. Fine. So according to the rules of debit and credit, what do? We record both the aspects, as I said. Now let's just understand how it will happen. The first transaction, right? When we invested, you invested money in your own business. At that time, what happened? Cash increased, capital also increased. So how will you record that? Cash is an asset. If it is increasing, then you will debit that. Okay, asset is increasing, you will debit that. And on the other hand, capital, or owner's equity, is a credit item. It's a credit nature item, so it's increasing, you will credit the capital account. Okay, $5,000, $5,000. So you see what is happening. there is a debit aspect, which is cash increasing, you're debiting the cash account to record it, and there is credit aspect, capital is also increasing, which has a credit nature, to record it you're crediting it by the same amounts. The transaction was of $5,000, you debited 5,000, you credited 5,000. So each and every transaction will involve at least two accounts. Okay, one account would be debited and another account would be credited. Okay, this is called as recording by passing a journal entry, or we also call it as double entry. Is that clear? Yes, this will be happening in the subsidiary books. Okay, or you can say, books of prime entry. Fine. See here, for every transaction, the total debits must equal the total credits. Yes, you saw, right? We debited cash account by 5,000, we credited the capital account by $5,000, right? Now let's talk about that furniture which we purchased. When we purchased the furniture, what happened? Cash decreased by $2,000 and furniture increased by $2,000. Both are asset, right? Both are asset, both have debit balance. So cash is decreasing, you will have to credit that, and furniture is increasing, you will have to debit that. This is the credit aspect and this is the debit aspect. Okay, and the amounts are also equal. Is it clear? Another example. So for every transaction, what will happen? The total debits must equal the total credits. Sometime it can happen, many accounts will be impacted just by one transaction. Let's just say 2 accounts are getting debited and 3 accounts are getting credited. Even in that case, let's just say the transaction is of $4,000. Then what will happen? 2 debits will be equal to $4,000 and here 3 credits will be equal to $4,000. No matter how many accounts are involved, always the amounts on debit and credit will always be equal. Minimum in each transaction there will be 2 accounts. This is minimum. Maximum there can be more also. Okay, fine. So this ensures that accounting equation, assets equal to liabilities plus equity, is always in balance. You see, this accounting equation is the foundation of this dual aspect concept. Okay, this dual aspect concept was designed according to the accounting equation. Okay, whatever you record through this, right? Rules of debit and credit, where we'll have dual impacts, and always the effect of those impacts will be equal and opposite. So that's the reason what will happen. This equation, this accounting equation will always hold the place. Whatever transaction or event happen in the business, you record that each and every time. After recording each and every transaction, this equation will be in balance only, because accounting rules are designed like that. Is that clear? So let's just relate now, the dual aspect concept with the accounting equation. Okay, let me take you to that. See here, it's really simple. See here, every transaction has 2 aspects. Okay, this is the accounting equation, assets equal to liabilities plus equity. Okay, see here, first type of transaction, what's happening is there is a change happening only on the left hand side. Okay, on the asset side, the value of one asset is increasing because of a transaction, and because of that, value of another asset is decreasing. For example, you purchase furniture with cash. So in that transaction, what happened? Furniture increased and at the same time cash decreased, by $2,000. So in the accounting equation, you have to understand how this will be happening. The change is happening only on one side. 2,000 increase, 2,000 decrease. So there is no impact on the accounting equation overall, isn't it? Yes. Okay, it will be equal only, right? And then let's say second type of transaction, asset is increasing and liability is also increasing. Let's just say you purchased furniture on credit. That means you didn't pay. You promised to pay later onwards. So what will happen? Furniture has increased. Furniture came in your business. Your inventory increased. That's your asset. And liability also increased. Creditor account will be credited. Why? Because you didn't pay. You promised to pay. So liability increased. You see, the same change is happening. Let's just say you purchase furniture of $1,000 now. So $1,000 worth of asset has increased and $1,000 liability has increased. Is it clear? Purchase of inventory on credit. Then let's just say asset value is decreasing, and because of that, liability value is also decreasing. Let's just say you paid that $1,000. If you're paying that $1,000, then what will happen? Understand properly. cash is decreasing by $1,000, and you know, the creditor, that liability, is also reducing by $1,000. Is it clear? Okay, then see the next thing. Fourth, liability is increasing, and because of that another liability is decreasing, okay, or vice versa. Fine. So when this can happen, let's just say you have a creditor of $500, okay, so that's your existing liability. So what you did was you created a new liability. You created bills payable and gave to that creditor. So in that case, now what will happen, creditor will decrease and that bills payable liability has increased. Okay, this is kind of a rare scenario. And then see, fifth category, asset is increased, and because of that equity is also increasing. Yeah, this was the first transaction. Yeah, what happened? You contributed capital into your business, right? So at that time in your business, cash increased by $5,000. At the same time, owner's equity or capital also increased, right? So that's the example for this. Okay, or you can also think about issue of shares in the company. Company issues shares. At that time, what happens? At that time, cash comes into the company and shares also increases. Shares are what? Equity only. Those are capital only. Fine. And then see the sixth transaction, asset is decreasing, and because of that equity is also decreasing. This happens in case of drawings or dividends that are made by the owners. If it's a partnership or single owner business, then when owner withdraws the money as a profit or just like that, cash also, so cash will decrease, and because of that the capital will decrease of the owner, right? Yeah, so equity will reduce. Okay, and in case of company, when dividends are given, the share of profit, at that time what will happen? The same thing, cash will decrease and the profits will decrease, which is ultimately the capital only. And then see the seventh and eighth category. These are exactly opposite things. See, liability is increasing and at the same time equity is reducing. Yeah, when shares are converted into debentures are kind of a loan. So what happens is shares are equity, so when they reduce, and debentures are what? Loan, right? It's liability, so that will increase. Fine. And then eighth transaction, see, conversion of debenture into shares, right? These loan instruments, that debenture, it is being cancelled and they are being converted into equity shares. So shares will be increased, equity will increase, and debentures will be cancelled, so liability will decrease. Fine. So these are the eight type of transactions that can happen. Is that clear? There can be a change only on LHS, or there can be change only on RHS, or there will be equal change on both the sides. Remember, accounting equation is based on what? That LHS equal to RHS. Okay, left hand side is equal to right hand side. So remember, always this equation will hold its place. Always, after each and every transaction, this equation will be like this only. Asset will be equal to liabilities plus equity. No matter what sort of transaction happens, always this will be equal. Okay, either there will be change only on one side, yeah, there will be change in asset, or there will be change in liability and equity, okay, or same change on both the side. Is that clear? Fine. So you have related the dual aspect concept with the accounting equation clearly, and you have understood what sort of transactions can happen, okay, how it will impact the accounting equation and everything. Fine. So that's all for this video. Okay, see you in the next video. Bye.